Okay, we're just going back to item 9 of the contract, and I've just got students in class to read the capital gains withholding for real estate agents handout, which is also uploaded on to Learn. In very simple terms, I just want to break this down very much for you. If the property is over $750,000, then value of $750,000, or the vendor thinks that it's going to sell for close or over $750,000, then the vendor whether as an Australian resident should basically be applying for a clearance certificate, and they should do that as soon as possible. And once they've got that clearance certificate, they would then serve it on the purchaser. And if they don't serve it on the purchaser before settlement occurs, then the purchaser is going to be obliged to actually pay 12.5% to the ATO. So on $1 million contract, it would mean that the purchaser would have to pay $125,000 to the ATO, and at settlement would be paying the $875,000 to the vendor. So it's in the vendor's interest to do that as soon as possible to get that clearance certificate. If the vendor is a foreign national, and that's what this was originally aimed at, it used to be 3 years ago. It was the property sales was $2 million, but they brought it down. And if it's a foreign resident that owns the property, then if they believe that the 12.5% is inappropriate, they can actually apply for a variation on that percentage. Otherwise, the purchaser would again actually have to pay the 12.5 to the ATO. So it puts a little bit of extra work onto conveyancers there with regard to that process and procedure. So please have a read of that article in more detail later in your own time. Now,
so Bill, would you actually apply for that certificate prior to actually putting the house on the market?
Yeah, even before listing, you know.
How long is that valid for?
Look, I think it's valid for 12 months.
So it's in the interest before you actually put it on the market to get this.
Exactly. Yes, absolutely.
Okay.
And in fact, on tonight's festivities, I've given you a link at the bottom of tonight's festivities where you can go onto the ATO site and you can see the clearance certificate. It's online that people apply for it. Okay, next one we've got is item.
Australian resident vendors also means Australian citizens for that purposes, doesn't it?
Well, resident, yes, yeah. But it was aimed initially more at foreign nationals who get a capital gain on selling the property. But it's, you know, if it's going to be a capital gain for an Australian resident, then they'll obviously, the taxation office are happy to get their hands on the money. But for most people, you know, if the property is their primary place of residence, then there shouldn't be a capital gain. You know, that should be triggered, but that process, you know, is something which has to be followed. And again, we've got the deposit, item 10, and again, we put that in words. And okay, the date of payment of the deposit. Now, importantly here, okay, so full name of deposit holder would not be normally your conveyancing details. The date of payment of the deposit. We have to make sure that the deposit is paid when? When the date we're going to put down there is, we're always going to make sure it's going to be when?
After the cooling off.
Thank you. Yeah, after the cooling off date. Okay, good. And so it could be, for example, on the next business day following the expiration of the cooling off, or by a certain date. We just got to make sure that date is after the cooling off. Now, item 11, GST. Now, normally on the sales of residential properties, which are already, you know, they're ordinary residential properties for residential purposes, then quite often you're going to see B and G, which may be relevant to those, and you tick whichever is appropriate and which isn't appropriate. If it's not actually clear as to whether one of these applies, you'd always check with your vendor which is to apply, and you'd get that instructions from them in writing, and if they're not sure, then you tell the vendor to seek advice from their accountant. Okay, all right. It's simple as that. Most of the time, if it's a residential property, we've got B there, we'd probably be ticking as yes, what a residential home that's being sold. And most of the time that's going to be the case, but not all the time. Now, item 12 we've got withholding GST. Okay, now, I've given you another handout which you can have a read of in a moment, but I just want to give you a brief synopsis of this. Item 12, withholding GST. Now, this applies, started in July 18, applies to new builds of residential premises and subdivisions of potential residential land. Now, just go back just one step a moment. In item 9, when we talked about the properties, and you'll see in that article that it applied to, in item 9, the property that was being sold, the definition of property which was brought into that was very wide. Okay, item 9, the land that was going to be covered was very wide. Item 12 applies to new builds of residential premises and subdivisions of potential residential land. Now, previously on new builds, the developer who sold the property would pay the GST tax component themselves to the ATO. But following this change, again, we have a process now where the purchaser now pays, if it's a new build of land and they're buying it, the purchaser now pays 1/11 of the purchase price to the ATO on or before settlement, and the balance to the developer, which is just over 9%. Right. So what is clear from items 9 and item 12 here is that you guys also would be taxation collectors. Okay. Now, the key thing we need to understand here, we've got in this contract, which seeks to recognise that. The first one we've got is A. Has the vendor provided written notice to the purchaser? And that's written notice to the purchaser stating whether the purchaser will be required to make a GST withholding payment to the ATO. Now, in most situations, if it's not going to be new land, the vendor can just basically state it's not going to be relevant in a simple letter or simple notice. Number B we've got. Now, they're required to do this. There's a fine if they don't. Now, according to the vendor's notice B, is the purchaser required to pay the GST withholding amount to the ATO in accordance with the Tax Act and Clause 13 of his contract? Now, for the purpose of our exercises, okay, because we're in our exercises, they're not new builds, okay, we're going to assume that the vendor has provided the written notice, and we tick yes. And according to the vendor's notice, is the purchaser required to pay the GST withholding amount? Then we would tick no into the second box under B. If that was not the case, then effectively at the C, you'd have to work out what the GST withholding amount was, which the amount we'd put there. I think it's 9%, just over 9% if it's ordinarily, or if they've got a margin scheme, I think it's 7% applied. And we then have to complete the details of the supply liable for GST in D and E, which we'd need to get that information from the parties to complete that. Otherwise, for our purposes, we'd be just ticking, on A and B, we'd be ticking yes and B, no, assuming that that notice had already been given. Now, item 13. Okay, item 13 now in this contract. We've got and just on the second article in your own time. Just read that second article in your own time. I've just given you a very basic synopsis of it, but it just shows the previous situation of how the developers had to pay the GST, and now it's the purchaser, the obligation on the purchaser. Now, item 13, conditions of sale. Now, I call these the easy special conditions. Okay, the easy special conditions. Okay. Now, the reason I call them the easy special conditions is because essentially you're just filling out the details. You're just adding the details there. You're not actually drafting the special condition yourself. All right? And the most common ones that you'll see here is finance. Okay, most people who buy a house are always going to want the contract to be subject to finance approval being granted. Okay, now to give you an example here. Now, when we talked about the settlement date about half an hour ago, all right. Now, I told you not to think about the settlement date in isolation. You can't do that. You've got to consider the settlement date in connection with, one, the special condition and also the date of the contract. So, I'm going to put this question to you. Now, do I have a volunteer? Despina. Despina is selling her lovely property. Where shall we say she's selling the property? Grange. And the property is being sold for how much? Let's keep the figures very simple. $750. Okay, $750. Now, do we have a purchaser? Volunteer. Jane. Jane sees Despina's property, loves it, wants to sign it, and Jane is quite a wealthy lady. She's got $100,000. Okay, but she needs finance of $650,000. And the contract is dated, what's today's date, everybody? 21st of August. So, on page 8 of our contract, okay, let's assume that both Jane and Despina have signed the contract today. Okay, so the last of the parties has signed it today. So the date of the contract there is the 21st of August. Now, that's today, 21st of August. So now we have to think it's going to be subject to Jane getting finance approval. Okay? Condition, the lender, whoever that may be, lending her $650,000. Now, how long are we going to give?
Can I ask a question?
Yeah.
Has she got pre-approval?
No, she's got no pre-approval.
Oh, she's got nothing.
Well, nothing.
Oh.
All right. Now.
I wouldn't want to sign a contract.
Yeah. Another question.
Just don't jump for the moment. I need to get this principle to you. Okay. Now. So today's the 21st of August, and we want to get. She's got to go to the bank and get them to give approval of whether they're going to lend her $650,000. Okay, so how long are we going to give them to get that? This is not the bank saying lending the money. This is the bank assessing her and then giving her a decision. So how long are we going to give her?
5 weeks, 30 days.
At least 2 weeks.
Well, yeah, 30 days, a month. I think keep it simple. It depends. All right, but I wouldn't be giving 60 days, not for finance approval. I'd be giving a month tops.
Yeah, maximum 1 month.
Okay, because, all right, Despina's sitting on this property, and you don't want to have it too long. Okay, it shouldn't take that long. 3 to 4 weeks should be adequate just for the bank to say yes or no. Okay, that's all that it is at this stage. All right. So, if we're going to give Jane a month to actually get finance approval, the bank just saying yes or no that they're going to lend the money, okay, then we can then work out how long we're going to give the settlement date after that. Let's keep it simple.
30.
Another 30 days, another month. Okay. Do you see where we're coming from now? Whatever the settlement date is going to be is going to reflect, obviously, the day of the contract and if there are special conditions. Now, that's an easy special condition example. Okay. Now, we're coming back now to the conditions of sale. The most common one is the condition of finance. Okay. Now, we have a little bit more complicated now. Okay. Now, in the next scenario that we've got, okay, Despina's selling her property. Jane loves it, but
Termites.
No.
Termites.
No.
You've got to sell your
Yes,
house.
Jane needs to sell her house.
Subject to it.
Okay, so it's subject to the sale and settlement of her house. Okay, now this is where it can get a bit more complicated, and this also becomes more complicated for a number of reasons. One, it may depend on the economic climate as to what Despina is going to be happy with. The other thing is we've also got to be practical, okay? Because Despina is not going to want to wait around forever. Okay? Now, the first thing here we're going to be saying is, right, conditions of the sale of the property. The sale of the purchased property. So, the question now we're going to have is, how long are we going to give? Okay. Okay. Well, actually, we'll come on to 3 and 4 first. The contract date. We're looking at item 13, B, numbers 3 and 4. Okay. So at number 1, you detail where Jane's property is. Number 2, we put the price which Jane wants to get for that property. Number 3 is the contract date. So the next thing we need to work out is, how long are we going to give Jane, okay, to essentially, I'm assuming the worst, she's got to tidy her house up, she's got to engage an agent, she's got to have an open inspection, and she's got to find somebody to sign a contract just like this for her property. Okay? Now, this is always going to be subject to Despina's instructions, and this is important. Okay? Now, a minimum, well, again, I'm going to have to qualify this, and I'll tell you why I'm going to qualify it in a moment. A minimum period we're going to give her just to find somebody to sign that contract is how long?
3 months. 2 months. 30 days.
I think 30 days. I'll probably be looking at giving her between 4 weeks and 6 weeks. But
That's a lot. I haven't got time to wait.
Well, that's exactly the issue. Okay, that's exactly and we're going to come back to that in a moment. So you've got to check with your vendor, but again, 4 to 6 weeks you'd normally think would be approximately right. If you want to keep it a month, that's fine. Keep it simple. And then settlement on that property might be
30.
another 30 days again. So that would then work. You'd then use those timelines to work out what your settlement date would be. But here's the trick here, you see. All right.
What happens if she sells her house? You agree with the 30 days, whatever, and it all happened. She sells her house for less than what she wanted, but then she's short to give me.
Say that again?
If she sells her house,
Yep.
instead of being, 700 that she wanted to sell it for, and she only got 650, but then she's short because she didn't have that extra capital.
Well, this is where the purchase. This is the issue. This comes down to the issue here. What the price is going to be on there. So you're going to find that if she can't get the 650, then come that's 4 weeks later, she's going to be advising you that she hasn't been able to sell the property, and so she can't fulfil the condition of subject to in this situation. So if she can't buy the property, then the contract's going to fall over. However, and this is where I'm saying economics is going to come into it in the practical world. All right, it's always also going to depend on how good the market is. Okay, if you've got a hot market where properties are going, like 10, 12 years ago, when the market was so hot, properties were going like this, then you probably wouldn't be giving her 4 weeks.
No.
You'd be giving her 2 weeks to find a buyer. Okay. If the market is really bad and you haven't had a bite, you've had the property on the market and you haven't had a bite in 9 months, you might be willing to give her extra time. Do you see what we're getting at here? All right. And so it's always, you can't look at this in a vacuum. It's always going to depend on the situation. But ultimately, you as the conveyancer are going to have to get instructions from the vendor, if the vendor's your client, as to how much time you're willing to give Jane to sign a contract just like this. Because the problem is, you've got to try, what I always say to agents is you've got to try and be in the middle of the line, what's reasonable. Because you can't prejudice your vendor. You can't have 3 months, because that means the vendor is locked in for 3 months. So the vendor doesn't want that. They basically want to say, well, you want to sell it now. And you see that period you could miss out on somebody else buying it, you see. But this is the problem. This is the risk you take, and this is economics.
But can the parties negotiate to extend that period?
Yes, they could. Yes, they could. Yeah, they could do that yes. I mean, it comes down to simple logistics, But it could be, though, you see, is that in that example, is that Despina, it's quite clear that she's got somebody else who's interested, but the month comes and Jane hasn't been able to sign a contract, and so she's not willing to continue with this contract because the special condition hasn't been met. All right, it hasn't been met.
Does she forfeit her deposit then? Because
She hasn't paid a deposit.
No, but aren't we?
Well, the deposit. I mean, if the contract is going to fall through through no fault of the party's own, you'd have to look at the clause, the terms in the contract, what it says about that. Remember, this is a standard form contract.
Yeah.
All right. So, usually the standard form contracts are how can I say this? I can't say safer, but because they're prepared by professionals, you expect them to be what's the word? They're not going to be hard contracts. Let's put it like that. They're going to be very professional. But whichever contract has been signed, you always need to check what the clauses of that contract state. And in that situation, the deposit, other than if it falls over the contract, then the deposit would be returned essentially. But apart from the $100, if that was taken.
Okay, so
yeah. All right.
Okay. Sorry, what's the difference between contract and sale date? Is sale date actually the
settlement date? Yes.
What?
In this contract.
Sale date instead of settlement date.
Well, a very good question, and I can't answer you. But that's why it becomes important, because you see, you can't look at these schedules in isolation. Item 13 actually refers you to Clause 15. So when you go to Clause 15, what you will actually should discover is that the sale date in 13b will be the settlement date. All right. Now, number C, we've got the conditional on deposit of the plan of division. Now, this is obviously you'd always attach a copy of the plan of division to give a greater certainty regarding the land. Now, with deposits of plans of division, it could be quite some time, okay, when this is when this is actually going to occur. And so, with that type of one, then you'd normally use in item 8, you'd probably use 28 days after the deposit of the plan of division. You wouldn't be able to be certain as far as the settlement date is concerned in that. But the date which you'd want there for the plan to be deposited to enable, and if it doesn't go through, then it would be subject to that going through. Now, item 14, you've got more difficult special conditions, again, which could include soil reports, building inspections, white ant pest inspections, conditions of sale. It could also be relating to the swimming pool, certificates of compliance relating to the swimming pool, which might also be detailed here. It's subject to that being provided and completed before settlement. So remember, these special conditions are, whether it's item 13 or item 14, they are matters which could actually mean the contract doesn't continue. It falls over because it's subject to this special condition being completed. All right. Now, later in the course, when we actually do the last couple of weeks, and we look at the assignment 2, I will actually look at special conditions with you and do an exercise with you on special conditions for you to consider. Many of the standard form contracts, and you'll see with the RESA contract, have pre-prepared special conditions which are inserted into the contract, which are filled out to make them a lot easier to actually complete. Now, over the page, we've got item 15, water consumption deposit. If your office has a policy, you'd put whatever the amount is there in case there's overuse later. Item 16, notice and orders. Now, we've got clause 11.2, notices to be complied with by the vendor. Notices to be complied with by the purchaser.
Notices by who, sorry?
So we've got items 16 and 17. Something else is just... Yeah. Now, so notices and orders. Okay. So what we'd be doing here is we'd be asking the vendor particularly if they've received any notices relating to the land which have to be complied with. Could be, something from next door. It could be something from the council, neighbours, anything like that. And quite invariably, you might ask the vendor, is there anything you're aware of? And they might say no. Now, I don't want you to put here not applicable. Okay? Some people I find put not applicable here, and I don't want to be as definitive as that. Because if you turn around and you say not applicable, then you're being very definitive. It's best to write none known. None known here, because at the moment I'm not aware of anything. Whereas if you say not applicable, then you're being very definitive and very clear, which potentially could be actionable later.
So as a conveyancer, you're taking your client, if it's the vendor's word for it,
yeah.
There's nothing there. Do you have a duty to actually investigate?
Well, you no. But what you would be doing, you see, is when we actually see the Form 1, you'd get the vendor to fill out a questionnaire. Okay. And that would also detail things like this, which would come up. But in this earlier stage, you're taking the vendor's word on what they know. Yeah.
What kind of notices from a neighbour? Things like, like I want you to pay for half of a new fence or something like that. Anything that there's some issue and some obligation. Next one we've got prescribed rate of interest. Okay, and you'll see this links to clause 16.4. Now, this details what the rate of interest will be, usually in relation to default. And the yardstick is usually so many, in most of these contracts, it's so many percentages above a certain bank's base lending rate or whatever they describe it. And if you actually look in this contract, you'll see that detailed. I'm not going to bore you stupid looking at that, but it's usually a set rate. Now, what I don't want you to see...
Sorry, is that referring to someone being in default?
Usually, yes, yeah. Now, what I don't want you to see is write not applicable here. Okay? All right? Because if you write not applicable here, then what you potentially can argue is that there is no prescribed rate of interest. So if there is a default later, there is no penalty default rate interest which has to be paid. Okay? Unless you've been given specific instructions, quite often I would leave that blank.
Just not right.
Yeah. The time when I would see something which you might see somebody actually changing this is that the vendor and the purchaser, they might have had business dealings before, and the vendor doesn't quite trust the purchaser because of dealings, and they want the percentage rate to be higher, and they've agreed this with the purchaser. The purchaser says, well, I want to buy this from you, but the vendor says, well, look, I've sold properties to you before, and I've had all this sort of problems, and there's only one. I'm not going to do it unless we have a high rate of interest there. If you don't comply, type of thing,
Okay.
But normally you would be leave that as it is. Now, electronic conveyance, and you have to read this in the context of clause 7. So we need to write yes or no if it's going to be electronic conveyance. So we have to write this, otherwise it will be. So we have to make sure that the item is completed, and make sure that you or the other conveyance on the other side is registered for PEXA, and so on and so forth. And because they have to create an electronic workspace within 10 days under clause 7.2. So now executing the contract, and we've got the execution parts. If it's a company, and parties sign, and the names are normally written underneath, the full name prints, and above we've got the signature. And okay, so the execution page is there, purchaser and vendor, which we sign. Now, just want to briefly take you through some of the clauses in the contract. I'll try not to send you to sleep here. Now, number 1. Okay, we're on page 10 of the AXA contract. And we've got definitions. Okay. Now, the definition sections is always important in a contract. We want to make sure that we're aware of what the definitions are. And it also becomes important because if we write a special condition later, okay, if we write a special condition later, we want to make sure if we intend to use a word that's already defined in the definition section, we want to make sure that we're meaning it to have the same intention. All right? So we always need to check that. Now, when we and you'll see things like here we've got definitions which we talked about earlier, encumbrances. Okay,
We've got improvements. We've got land defined and many others. And turning over the page, you also see the prescribed rate. And we just mentioned that a few moments ago, and we may as well, as I mentioned it, means the interest rate specified in item 7, or if no interest rate is specified, the rate which at the time default occurs is 2% per annum greater than the rate of interest charged by the Commonwealth Bank as an overdraft rate. So it's giving it a yardstick, all right? And you've got many other definitions there which are important. Okay. Now, I'm just going to take you through clause number 2. We've got the contract of sale. Okay. The vendor will sell to the purchaser, and the purchaser will purchase from the vendor the land for the purchase price in accordance with the terms and conditions of this contract. That is obviously a very important section which recognises the offer and acceptance in the agreement. And number 3, we've got land, what the land is sold together with. And remember earlier we talked about fixtures and fittings. And we've got all improvements and fixtures on the land, the included goods and any easements, rights and so on. Okay, so it's sold with all of those. And over the page, the land is sold subject to any of those exceptions, reservations and encumbrances we talked about. Okay. Okay, just going through now. And just as we mentioned, remember we talked about fixtures and fittings. 3.3 we've got there. The vendor will remove the excluded items from the land before settlement. And B, we've got the vendor must repair and make good any damage. Okay. Now, 3.4 and 3.5. Okay, we've got boundaries and fences. The vendor does not warrant that any wall, fence or hedges on the boundary of the land, that any improvements do not encroach on any adjoining land, and so on. 3.5, we've got incorrect description. No error or misdescription of the land or the included goods and shall invalidate this contract. And the purchaser cannot object due to any error or misdescription of the land or any deficiency in the area or measurement. Okay, now, what I would probably be suggesting, particularly to purchasers, if you're acting for a purchaser, is to seriously consider getting title insurance. All right. There's a couple of providers, and it's usually a one-off payment. And relatively speaking, it's not that expensive. It's just a case that if anything does crop up later with the boundary, or issues regarding incorrect description of the land, which come up and bite you later as a purchaser, the title insurance is there to actually offer some protection. And I'm not doing a sell for these insurance companies now, but what I do find quite interesting is that, you know, when you look at how much a purchaser pays, you know, that they're buying the most important, they've entered into the most important contract they're ever going to enter into, which is like hundreds of thousands of dollars. They're paying, you know, $20,000, $30,000 in stamp duty. And then, you know, if the purchaser then is going to balk at the $500 or whatever it is for the title insurance, it's normally a one-off payment. I don't know what the current rate is. You know, you might want to find that out. But it's usually a one-off payment. It kind of puts things in perspective. Do you know what I mean? It may be worth actually spending that little bit of extra money in the greater scheme of things.
So is that why that hotel purchaser lost, because of this 3.4, 3.5?
Well, I can't talk about his contract. You know, you'd look at that. I suspect the contract which he signed 50, 60 years ago probably didn't detail this. You know, I'm only guessing. I don't know. But the High Court in that instance said there was no fraud, and and the purchaser had an obligation to check, you know, the property itself. It was their obligation to also check, and so it might have been a harsh decision at the time, but you know, this issue would, you know, potentially solve that, you know, with a bit of insurance there.
Quick question, just left field. If you, because this happened to us, we bought a block of land with a stand of trees and stuff on it, and the people who bought it off had gone, we were sort of all approvals, finance approvals and everything else had gone through, so we're just on our way to the settlement date. and the previous, or the person we purchased the land off of, sort of like the 2 or 3 days before settlement, went to the stand of trees and dumped a truckload of rubbish.
Right.
So when I went and had a last look at it, saw it, and went back to the real estate agent and told him that he can get all the property off, like all the rubbish off of where he's dumped it.
Yeah.
And anyway, he talked to the vendor and then got back to me and said, yeah, he's going to clean it all up.
Yeah.
But if I hadn't noticed that, because when we first looked, it was fine, and it's just a block of land, it's not like it's a house or anything we want to do a second look at.
Yeah.
But is there any, like, what rights would a person have there?
Right. Well, the first thing you need to do is look at what the contract says. You know,
Right.
whatever contract you've signed, you'd look at the contract. But if you're saying that they've dumped loads of rubbish or whatever, you know, you'd look at the contract and you try and see, you know, what clause in the contract has been breached here. You know.
It would be nothing because there's nothing on there.
Well, I don't know. You'd have to check it.
Okay.
Yeah. It's an interesting one because because you haven't become the legal owner. For example, if you were the legal owner and then it was dumped, you could take them action under trespass. You know, I'll have to think about that one for you, to be honest. But you'd always look in what the contract says, whichever one it is. But we might come across something in here in a moment. Number 4, we've got purchase acknowledgements, agreements, and warranties. Okay, and you'll see there is certain things which are the purchaser is acknowledging or agreeing have or haven't been the case. Number 5, we've got cooling off has been mentioned, and if you read that, you'll see that if the contract is rescinded by the purchaser pursuant to Section 5, the maximum amount of which may be retained by the purchaser using this section will be retained by the vendor, and the balance of all the monies paid by the purchaser under this contract will be repaid to the purchaser. All right. So again, the maximum amount before calling off was how much again? 100. Thank you. Number 6, you've got payment of deposit and purchase price. Number 7, we've got electronic conveyancing, which would be relevant if that's the case. It's changing over to electronic. Yeah, it's changing over, and there will be. I think there is a date when it will all be electronic, but it's been. It's been. Sorry.
Next February 2020.
2020. Yeah, I thought it was a year away. Yeah, I thought it was about a year away, but there's still manual settlements taking place. Now, settlement date. I'm just going through some of these now. One that I want to. Okay. Number 10. Just move on to clause 10. Now, just have a read of that clause, clause 10.
Okay.
Everybody read that?
Yeah.
Okay. So the land shall be at the risk of the purchase on the date of this contract, and the vendor must use the land with reasonable care while the vendor is in occupation or has the use of the land. Okay, so a purchaser should be doing what, do you think?
How's the podcast going? Is it time?
Oh, just got about 5 minutes, thank you. Yeah. A purchaser of the land should, as soon as they sign the contract, and they're aware that the purchase, they should be taking out insurance on the property. All right? Even if it's a mere cover note, they should be taking out insurance.
What kind of insurance? Title insurance?
No. Ordinary insurance on the buildings,
Okay.
on the property. Property insurance, yeah.
Okay.
All right. In case it burns down or there's any damage.
Bushfire area.
Well, exactly. And, you know, I could get very technical here with you. And, you know, I've had some people turn around and say, oh, yes, but I've got my cooling off rights and I can cool off, you know, within 2 clear days, so I don't need to get it straight away. The problem, and I understand that, but the problem is, You know, you've signed the contract and the property might be 30 kilometres from where you live. You may not have a clue what's happened to the property. You may not call off because you're not aware there's any problem. You know what I mean? So the purchaser should always get insurance. Now, clause 11, we've got statutory requirements and consents. The vendor warrants that since the vendor became the registered proprietor of the land, no improvements have been erected and no alterations or repairs have been carried out on the land without all necessary consents and approvals having been obtained, and to the best of the knowledge, information and belief of the vendor, no such improvements were erected, etc., etc. So basically, no improvements have been made without consent has been given. So the vendor's giving a warranty. There were some purchase warranties previously, which they're agreeing to, and the vendor's saying nothing has been altered, alterations or repairs without consent. No. Now, many years ago, a relative of mine, who was very handy indeed, he decided that he was going to build an extension onto his house, which included a bathroom. He expanded the carport. He built on an extra bathroom and shower and built on an extra living room. Right? It didn't really take him that long. He was quite a very handy person. And I recall I was actually at the relative's property that day, and he realised when he got an agent in to actually sell the house, and one of the first things the agent said was, "Have you built anything without consents?" And my relative actually owned up that, this 2.5 extra rooms had been done. He didn't think he needed to get consent. And of course, the agent said, "Well, you needed to get council approval to all this." And so the relative of mine then applied retrospectively for the approval, and while I was there, the council guy turned up and wanted my relative to explain to him what he wanted to do. And it was like a Fawlty Towers situation, because suddenly my relative, who speaks very good English, not his first language, suddenly he couldn't speak English very well at all. And his mother tongue was suddenly coming out, and he was pleading ignorance, and he was trying to whisk the inspector over the other side of the building. And I was sitting in the dining room, which had been extended, and I was sitting there, and I could see all this happening. And I'm going to be quite honest with you. Yeah. And the relative thought that he'd hoodwinked this council guy and said goodbye in his foreign language and rah, 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 and came in to me, and I was sitting there, and I was just. And he thought he'd got away with this. And of course, 5 minutes later, I can see the council guy outside the area of the extension, the bathroom, and he's checking all the walls and checking everything, rah, 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 rah. He wasn't stupid, this guy. And in the end, my relative was actually very lucky, because he was good at building. You know what I mean? So what he'd built was actually good, and the council guy came later and inspected it, and he got retrospective approval and so on and so forth. But it was a nightmare, basically, initially, and that's really what this is about. If there were any improvements, and he was lucky in the sense the improvements he'd made were good, solid improvements. He'd done the job properly. But the problem, obviously, is that if the job hasn't been done properly, you see what we're getting at now? And, there is an issue with that property, then what do we got? This clause is not going to be complied with, and later on there could be a lawsuit. Thank you, yeah.